Today we're going to talk about the EURUSD because it is bouncing from a multi-decade support that I've discussed over the past week. It's also approaching a level that, if broken, I do think could trigger a 400 pip rally from the EURUSD. So I'll show you guys exactly how I'm trading that in today's video. And if you do enjoy the content, be sure to subscribe to the channel and click the bell icon to get notifications because I am releasing these videos every weekday. And lastly, none of the content in this video or any video is ever financial advice because it is just my opinion. So with all that said, let's take a look at the EURUSD monthly chart. So this is the channel on the monthly that we've discussed now for the past week. You can see that it's really directed the price action here for the EURUSD over the past couple of decades. Okay, so the market is coming off of this area just above 108 this week, and it's up significantly. Even today, it's still up over 1% coming off of this level. So you can see here on the daily chart, if we move in, you can see where the market is coming off of this level down here. So this is the channel support that we just looked at, and you can see how it is so far holding as support. Now, the big test for the EURUSD, and I mentioned this in the most recent weekly forecast as well, that the highest conviction long here for the EURUSD, in my opinion, is to get above this 2008 trend line. So you can see back here how this level served as support for the EURUSD. At the moment, this area comes in right up around 110.80. Okay, so this area is going to be significant for the EURUSD to get back above to reclaim in order for it to move higher. So let me go ahead and show you how this level looks on the monthly time frame. So if we move back out here to the monthly, you can see where this level extends off of the 2008 high. Okay, and there are several touches along this level where it served as resistance during this multi-year downtrend. Now, we did get a breakout from the EURUSD back here in 2020, and we've had a very elongated retest of this level as new support. Now, at the moment, it is trading below it on the daily and weekly timeframes, although it is technically still above it on the monthly because the month of March has not closed yet. So technically, it's still above it on the monthly, but daily and weekly, it is trading below it. And that's why it's going to be key to see the EURUSD reclaim that 110.80 area in order to move higher. Now, let me show you guys exactly how I plan on trading this. And, as always, this is not financial advice. This is just what I'm doing. So moving back to the daily time frame. All right, so let's go ahead and recap really quick. So this down here is the multi-decade channel support. This up here is that 2008 trend line we just looked at. So you can see where the EURUSD is trading below this level up here on a daily and weekly closing basis. So here's what we need to see for the EURUSD to really start to move higher, because so far today's bounce is nice to see, but technically speaking, this level up here is still intact as resistance. So we need to see the EURUSD close above this level up here, right around 110.80 on a daily closing basis. So what that means is we need to see the daily close somewhere up here over the coming days. It doesn't have to be today, but sometime over the coming days, we do need to see the EURUSD reclaim this level on the daily time frame. Now, it is important to use what's called a New York close chart, meaning that you get 5 24-hour sessions every week in the Forex market, because anything less than that, and you're going to get what's called a Sunday bar, and these levels are not going to line up quite as well. So it is important to see the EURUSD close up here at 5 p.m. Eastern. Okay, now if you are looking for a New York close broker, I do have my preferred broker in the description of this video. So 110.80 is going to be key, guys. We need to see the EURUSD reclaim that level in order to move higher. Now, how much higher? Obviously, we'll have to wait and see, but I do think that if we get the close above 110.80 up here, then this area up around 114.80 is going to be exposed. Okay, this is going to be the next critical resistance area if we see the EURUSD get back above this area up around 110.80 on a daily closing basis. Now, you may be looking at this and wondering, why would you not short from 110.80, right? Because this is a big level that the EURUSD is now trading below on a daily and weekly closing basis. The reason I wouldn't short this, and this is just me, but the reason I wouldn't short it is because the market is coming off of a multi-decade support, first of all, and there's not a lot of room here to short it, but also the fact that the market right now is snapping right back to resistance, okay? And a lot of times when you see this, when you see a market that just moves right back to resistance instead of taking a while to get back there, all right, it's the difference between a rounded retest and an immediate retest. This right now, what we're seeing so far looks like an immediate retest. We haven't quite seen the test of this area just yet, but the fact that the EURUSD is putting in almost a V bottom so far, this is why I would not short from 110.80. That's obviously just my opinion, but you combine that with the fact that, like I said, the multi-decade support is right down here around 108.60, and there's just not a lot of room to play with here. And also the fact that the market does look relatively strong so far this week. Now, I do also want to look at the DXY, so the US dollar index, because obviously we know that these two tend to move inversely to one another just because the euro is the most heavily weighted currency within the US dollar index, okay, the DXY. So looking here at the DXY on the daily time frame, so you can see going all the way back here to 2021, okay, mid 2021, you can see how this market has just kind of carved this ascending channel. Now, at the moment, the market came into this confluence of resistance up here right around 99.40. And so far, we are seeing the DXY start to roll over from this area, as I mentioned on Twitter. So here's what's going to be key for the DXY. And remember that the DXY tends to move inversely to the EURUSD. So it's no surprise to see the DXY coming into some support down here right around 98. Okay, so this is the bottom of this 4-hour channel. And you can see where, again, the level down here comes in right around 98. The DXY is just above that level right now, while the EURUSD is just below 110.80. So all of this makes sense. What we need to see from the DXY is a close below this channel support, down here right around 98. Okay, now there is a good chance that we see a bounce from here, just like there's a good chance we see the EURUSD sell off a little bit from 110.80 just because that is resistance. But it's going to be key to see the DXY close below this channel support down here and move to this larger channel support right down here, right around 96. Now, if we were to see the DXY break below this level, okay, then I do think it's on its way toward this larger channel support down here, which likely coincides with the EURUSD moving up toward that 114.80 level. Okay, so these two are lining up relatively well right now. We need to see the EURUSD get back above 110.80 and also see the DXY get below that channel support right around 98. So as of right now, in summary, the EURUSD is coming off of a multi-decade support, so it does look pretty strong. Also the fact that this looks like an immediate retest of resistance. So for those reasons, I'm not going to short from 110.80, but at the same time, buyers still have work to do. They need to reclaim 110.80 on a daily closing basis up here. Okay, they need to close it up here in order to re-expose 114.80. And at the same time, as I just mentioned, the DXY needs to get below this 98 area to open up 96 and send the EURUSD higher. Now, alternatively, if we were to see the EURUSD close below the March low, okay, this current low right down here around just above 108, okay, if it were to close down here, then that would be bearish and would open up the 106.50 region. But as I said, for now, this bounce looks relatively strong. So we'll have to wait and see what the ECB does, as well as the upcoming US CPI numbers. All right, guys, so I hope you enjoyed the content. If you did, be sure to subscribe to the channel, click the bell icon, smash that like button, and leave your comment below. I will talk to you guys again tomorrow.